All right, guys, so welcome to the third day of this training. And today we'll be talking about the concept of order flow. All right, but before we talk about order flow, right, let us start with premium and discount areas, right? Because we're still on the market structure series. All right, so let's talk about premium and discount, then we delve into order flow. All right, so let us begin with premium and discount. If I'm not able to finish up premium and discount, then we would continue order flow tomorrow. Right now, one thing you should notice is that the market has what we call premium and discount. So premium and discount simply means that um, you divide the trading range into two. Now, first of all, what is the trading range? Right. This whole concept we've understood if you understand three things. Number one, trading range. Number two, we'll now talk about PD, premium and discount. So we have to understand what the range is before we can talk about premium and discount areas, right? So if you have not gone through the previous videos, please do have to go through it. The link to the playlist will be in the description. Just click on the link and you have access to the playlists. All right. Yeah. So we started on Monday, or sorry, Tuesday, and this is the third day of this training. All right. So do how to go to the last videos so you can understand what we're talking about. It's a full lecture, and the lecture is not complete without going through the previous lessons. So take a moment to go through the last lessons before this one so that you can be on the same page with me. All right. And of course, if you're watching this video for the first time, do what to just click on the subscribe button, because from my analytics, I noticed that more than 70% of my viewers have not subscribed, right? So if you want to really get more value, because when you're subscribed, you would know when my new videos come up. And when you're subscribed, it helps me know that you appreciate what I'm doing here. So just help me click that subscribe button and turn on the notification for more videos. All right. So let's talk about range and then premium and discount. Right. Today class might not be so long because what it's about is not so difficult. Now, what's the trading range? A trading range is simply what's the distance between the last swing high and the last swing low. So of course you have to pay attention towards this current structure, right? So the distance between what this last swing low and the last swing high, which is what this high here. So this was referred to as a trading range, right? This use of the purple line. So it was referred to as a trading range, right? And this is for a bullish example. So you can type it there. This is for a bullish example. When the market is bullish, this is how you determine your trading range, right? As I told you guys something yesterday, that a protected high, or let's say protected low, is where you really pay attention to. So this is protected low. Why? Because this low took out liquidity, right? So there was a liquidity takeout here before my price made was this new high. So the distance between this low and that high is what we call what a range. And of course, you can call a swing high a range high. You cannot put in more details. Range high. So I have our range high up there, right? We have our range high up above here. And then if we do the same thing, you have what a range low. So let's just take off the drawing there. Let's put in low. All right, so this is what we mean. So the distance between this range high and this range low is what we refer to as what a range, a trading range from here to that point. Now, for a bearish example, we are talking about something like this. The market is bearish, right? No, we see the market being bearish, and then market does this, right? So we want to use that same line, right? We want to use that same line to determine it. Right, so this is what we call a range low. So we have our range high here, and we still have our range low. So the distance between that high and this low is also referred to as what? Our the range. So I'm just dividing this for dividing sake. So this is for a bearish example. Right, this is for a bearish example. So for a bearish market, you determine it this way. Distance between this high and this low. Right. Of course, it won't be in the same chart. I'm not trying to differentiate it by not drawing too many things, because if I start drawing these things individually, it might take a lot of time. So I'm just trying to use the same drawing so that you understand, right? But just for to make it clearer, right? Then just take it down. So if you take it down here, so we have your range high and range low. So this is a best example. So you take out your swing high, which is what this highest point here, and then you take out your swing low, which is this lowest point here. So it's supposed to fit as what a range, right? So we don't have what our range, we don't have what our range low, and of course we also have our range high. So this was the first to the range. Now we have understood all that. What next? So we have to understand what a premium and a discount area is. So for a premium and discount area, you're looking at the distance. You're dividing the range into two, sorry. So when you want to get a premium and discount level, you divide your range into two. So you take out your flip tool, take it here, and divide into two. So you can use a gun box or a flip tool. So this is for a gun box now. You can use your gun box, but I know that many of you in MT5 don't have gun box. So let us use Fibonacci tool so that you guys can understand it. So you can take out your flip tool since you don't have gun box on your MT5. Right, let's use flip tool. So if we take it from here to here, so then you can now maybe take off other diagrams, right? You take off 62, other ones just for this reference sake. So now you have what? Your discount level, right? So the discount level is what? This lower half. So the lower half is what we call the premium discount. And then the upper half is what we call premium, right? So this upper half is what we call premium, right? So you have your premium level here, and you have your discount level down there. Now, what is the importance of premium and discount? Now, the importance of this is that the importance of, I don't think this spelling is correct. I think it's like this. My God, no, I'm correct. All right, so the difference between these two zones depends on what you're doing. So for a market that is bullish, you want to be buying at a discount level. All right. So discount levels are where you want to look out for your bullish setups, right? You want to buy when the market comes to a discount level. All right. That is basically what you want to be doing. So for a bullish market, you're paying attention to the discount levels, right? You don't want to be buying when the market is in a premium. For instance, now market is bullish now, and then you want to buy here. So if you take out your range now, let's assume I will divide this into two, right? If you divide this into two, you see that if you divide this into two, you see that this is your discount level, right? It is wrong for you to be buying the market at premium because this upper half is the premium, while the lower half is your discount. So the area you look out for buying is at discount level, right? You buy a discount in a bullish market. So you buy a discount in a bullish market, and then you buy discounts. So you want to buy a discount when the market is in a discount level, you buy, right? And then you want to sell when the market is in a premium, right? You want to sell at premium markets. All right, so what we sell premium markets, right? So this is what we refer to as what? A discount market, right? So your attention should be where? At this lower half. When price comes to this lower half, then you can look for opportunity to buy. All right, you can look for opportunity to buy. You're paying more attention at the discount level when you are bullish, right? So you're not trying to buy the market when it is at a premium level, right? So that's basically what you should be doing. Now we have understood the difference between a discount level and a premium level. Now it is what do we do for a sell scenario? So for a sell scenario, when the market is bearish, right? The market is bearish. You are seeing a bearish structure. What happened? So if you're seeing a bearish structure now, market is trading downwards, right? And it starts retracing. What do? You take out what? Your FIB tool and you measure from here to this point, right? So your focus is what? To look for sales inside what? The POI that is at the premium level. So you're paying attention to what? The point of interest or the order blocks or the imbalances or whatever you use at what? The POI at premium. So whatever POI is at premium, that's what you look out for. So it's wrong to be selling the market down here, because most times price is going to retrace and then to catch you. Maybe you're trying to sell down here, you will not take a loss for price to come to this level and then move downwards, right? So let us look at examples where these things panned out. Right? So we're just trying to see if we can see good examples. Or let's use a 15-minute chart, because 15 minutes will give us enough detail. All right. So if you take out a 15 minutes chart, let us just see what the market has been doing. Right. Let us just do a very quick one. All right. So look at this range here. This is an example of a bearish market. So if this is a swing high, this is a swing low, right? So now what happened? If you take out the Fibonacci 2 and you draw it from this swing high down to this swing low, you'll see that price had to come all the way in towards your discount level, or say your premium, before the sales could continue, right? So that means if you sold at this lower end here, would have likely gotten what? A sell. Right now, the current market action is still giving the same. So if you take out your fib 2 from here down to this point, you can see that price has not gotten up towards your premium level yet. But now, note something. Did you notice that price didn't get to premium before making a new low? Now, in this kind of case, what do? You simply extend it towards the new low. So now you're not using this low anymore. You're using this low, right? Because price did not give another swing high, right? So anytime that price makes a low without giving another swing high, let me explain. Now, the market is bearish, right? You have your swing high here, and then price makes a low here, and then you draw your fib tool from here to here, and then you notice that price did not retrace to form maybe another kind of swing high. You know what the swing high is? Liquidity taken and then a new high. Price did not do this. Instead, price just made a new low. Like just something like this, they made a new low. What do you do in this kind of cases? You simply extend your fib 2 towards that's new low, because a swing high has not been formed. Now, what if price makes that swing high you're looking for? What if price makes a swing high? Maybe just something like this. Then it makes a swing high before dropping. Now, in this kind of scenario, you now move your fib 2 from this new swing high to the swing low. So the only time you move your fib 2 to a new high is when a new swing high is made. And I told you what a swing high is. A swing high is a protected high. So the only time you move your fib 2 is where you can see a clear swing high form, right? So as long as this swing high has not formed, you're still going to use that old high to whatever low you see. Just move it. Even if the low goes, you can continue moving the low until you get where price comes to retrace and give you a new swing high, right? So I hope that is clear. Now that's what happened there, right? So this is our current market. So we want to see if price can come to the midpoint, and then you can look forward sell opportunities, right? So let's just look at another example here. So in this example, your market was kind of bullish. You can see market kind of breaking bullish, right? So it's kind of bullish market here. So we saw that this low took out this low. So this is a swing low and this was a swing high. So if we take out your fib 2, you can see that price came, see it here. And see how price came deep into discounts before we doing what? Making a new high. And then finally it dropped to the ground. All right. So that is how you mark your premium and discount levels. You always wait for price to come to discount levels before looking for what? Sell opportunities, right? Or buy opportunities rather, right? So imagine that this particular market now, imagine you are buying somewhere around there, or maybe somewhere up here, you'd have lost this trade. Now, some people would have been like, okay, this is a breaker block. They'll be like, okay, breaker block here, and they're going to be buying these markets. You say you have lost a trade because this breaker block was above what? They would swing high. Right, so this breaker was above the swing high, which makes it what not. I mean, it was above the discount level, which made it less probable. All right. So you want to always see price come to your discount levels, right? For before you look for what buy opportunities. And now one thing you should notice that discount and premium levels are also time frame dependent. That means price can be on a discount on maybe the 1 hour and it is at premium on the 4 hour. Right. Let us look at the daily chart of this market. So if you look at the daily chart of this market, you will see something very, very wonderful. So let's just pay attention to this point here. Well, let's use recent market action. So I can also go to lower time frames. So do you know that on this market, right, inside this market range, right, we have a kind of bullish range here from this low to this high, right? Do you know that even inside this range, in this premium level up here, we are still seeing lower time frame levels. Let's go to the lower time frame. I want you to understand this thing. So I want to make sure this is visible on the lower time frame. Okay, so visible on let's go to the 45 minutes charts. Let me show you something that you guys understand what I'm talking about. So now we have marked that, right? Notice that even inside that premium level, remember this is the upper half, which is what premium, right? Upper half, which is premium on this particular chart. This is our premium level, right? This upper half. Now, on the lower time frame, on the 45 minutes, this area here was a discount. Watch something. If you take the 45 minutes chart from this low to this high, we can see that this region here, from here, from this point here to this point here, was a 45 minutes what? The 45 minutes discount, right? Meanwhile, from here up until here was what? The daily what? The daily premium. That means it was the daily upper half. While on the 45 minutes, it was the 45 minutes lower half. So you can see that at this region here that overlap, there was a premium and discount overlap, right? So always take note of the time frame. Sometimes the premium and discount levels tend to overlap. Now, what do you do in those cases? In those cases, you can best wait for price to come into discount, which is within discount. So you can see that at this lower end here, it was part of the 45 minutes discount and also part of what? The daily discount. Remember that daily chart is from here to this point. So this lower half was a discount which overlap with what? A 45 minutes discount. So you want to make sure that your high probability trades are coming at levels that are on discount on both the higher time frame and the lower time frame. So the best place to have bought this market was all the way up here. Did you notice that as price came to this region, you can see how the market exploded from this point here, right? You can see the explosion from this point here. So this is actually one of the best places to look for your buy opportunities. Although even though you can see that on the 45 minutes, price came to a discount here and still bought them, but it didn't go, it was not very energetic. So those energetic runs come from when price is inside a discount within a discount. So whenever you're taking your trades, let the higher time frame and the lower time frame be showing you the same thing. You want to see a correlation on your time frames, right? Don't go and be buying inside a daily premium unless there's a clear liquidity to be taken. Like now, for instance, now let's say price is very equal to a liquidity point here, and I want to buy is maybe you set opportunities to buy just very close to this high here. Right? Those are the rare cases where you can buy at a premium when there's a very clear liquidity to be taken. Maybe there's an equal high to be taken. Maybe one price, maybe news or something such that price should go and take out this high. Maybe you believe that the price should take out this high here. Right? You have reasons to believe that price will take out that high. Right? You have reasons to believe that price will take out that high. So now you can look for buy opportunities Yeah, but even with this, it's very, very risky to be buying when the market is at the premium level on the higher time frame. So for your best trade, it's always wait for price to come lower. Let price drop for your buys. And then if you're bearish, you want to see price go higher for your, whatever you're doing. So let us look at one last example just to buttress the points further. Right. So this is the Nasdaq now. So I'm trying to get the structure of this market. Okay, okay, I can see a bullish structure. Okay, yeah. I can see a bullish structure on this market, right? So let us pay attention to this point here. So I can see a swing low and then a swing. Let us just pay attention to this market. It's a bullish example now. So we had our swing low here and then our swing high here. So we can, if you draw your fifth tool from here, you can see how price came very clearly towards your discount level. So how price came what to your discount, and you can see how price did what gave a very beautiful buy. Right, and then what do we see again? Markets made another one here. This is a new swing high and swing low. So saw a swing low and a swing high here. So you can see our price. So this was it. So you drop from here. The reason I'm using this high is because this is the highest high. So this was a swing high, this one here. Right. So you can see swing high, swing low, and then swing high. So you can see this is a high you should have used, but you can see how what happened. Just pay attention to this. I wish that this market would be very, very easy to push by. Okay. Okay, this was an example where price didn't reach a discount. So price did not reach discount here. Right? Price did not reach a discount here. Right? Just came halfway and then ran above. So this is one of the rare examples where price didn't come here. So just because you have a discount level doesn't mean that price will always come to your discount level. Right? But what I'm saying that your high probable trades would occur when price comes to your premium levels or your discount levels. So this is a bearish market now. If you take from this swing high to this swing low, you can see that price actually came 50%, right? You can see it very clearly there. I'm trying to get this low. You can see how price broke and then came back 50%, and you can see how it dropped down, right? So always make sure that your trades are at discount levels, and of course, always look at the higher time frame. Make sure that your price, your entries are discount within discount, right? So that is it. Unless maybe you have a very strong bias, maybe you believe that price wants to go up. So maybe if maybe price wants to go to this point here, by all means, right? Price might not really give a deep retracement on daily. Maybe price wants to take out this daily high now. Price might not really give a deep retracement on the daily chart. It's just be retracing to lower time frame discount. So sometimes you can also work with the lower time frame discounts, especially when the market is very, very impulsive. It might not retrace, right? The market is very, very impulsive. It might not retrace to discount anymore on the higher time frame. It just be giving lower time frame retracement and then pushing higher. Lower time, you can see how market was giving lower time frame retracement and then pushing higher, right? So that is just it. Let's look at daily chart again. I want you guys to get this thing very well. So back to the daily charts, you can see something here. So if you judge this market now, you can see that, watch this, from here's our last swing high and our last swing low. Remember, the low must take out liquidity. So you want okay. All right. So if you use from here to this point, you can see that price came down to our discount level here, right? And then you can see that as buying impulsively. Now, are you telling me that at these upper regions, there have been no opportunities to buy? You can't say so, because even in this premium level, there have been opportunities to buy because price has been impulsive. So even when price is not at discount, and maybe you feel that price, maybe you already know that price should go higher because now we're in a bullish market, the market is coming from this higher low and it's going to make a higher high, right? So knowing that price is going to make a higher high, you can still look for lower time frame discount levels without waiting for price to come back, because already price has hit our discount level once, come back again, hit it twice. So in this kind of cases, where price has already hit your discount level, the high time frame, you can simply go to your lower time frame now, maybe on the 45-minute chart, and then look for buys inside there. Let's check the 30-minute chart. So now look at 30-minute chart. Can you see that on the 30-minute chart, they're having what? Bullish retracement for buys. Because that price has been retracing, buying, retracing, buying, retracing, buying, and all of that. Even when we are inside what? A higher time frame what? Premium level, right? So we have to always pay attention to that. Pay attention to whatever you're doing. Let me extend this well so you guys can, so we can see this clearly. All right. So let's mark this as the beginning of our discount level. Our discount begins here, right? So this is our discount, our premium begins rather. So you can see that even after bracket hits premium, there have been buy opportunities all the way up here. You can see our price has been retracing. So this is the daily premium. But if you look at the lower time frame very carefully, you can see that even in that daily premium, there has been what bullish retracements. Look at this. Swing high, swing low, swing high. Price came to discount and then was pushed above. Then from here, can see another low here, can see another high. Price came in was to discount again and was pushed above. Right? You can see that there have been beautiful buy opportunities even when what we are inside a bullish market. Look at this again. Just look at how this market has been printing beautifully. So from here, let us zoom in a bit. Let's see what that price got to discount. So from this swing low now to this swing high, right? Can you see our price gets got to 50%? You can see it here from this low to that high. Consider price came towards discounts and then pushed higher. So if you have a reason for price to continue going up, or maybe going down, you don't really need price to come to a high time frame discount and premium alone. You can also use the lower time frame discount and premium levels for your entry, and then you go in direction with the higher time frame, right? So that's just a trick there. Pay attention to the higher time frame direction. If you get the higher time frame direction, then you don't need price to still give you what higher time frame discount anymore. Just use the lower time frame discount and then continue with that overall direction. So this is where we ended the call. Please, I would like you guys to just click the subscribe button if you haven't. If you learned something in this video, just do the like and subscribe. So share the video with your friends and drop one thing you learned in the comment section, right? Just drop one thing you learned in the comment section, right? So I'd love to see you guys tomorrow. Tomorrow is the day 4. So have a wonderful day. Have a wonderful evening. Have a wonderful morning whenever you're watching this. So have a cheers and God bless.